Okay, welcome back. Let's study financial performance analysis. As you have heard from me earlier, performance measures can be financial as well as non-financial, right? So, what do we have to study right now? Financial. Right now, we are studying financial, how to measure performance in finance. It's not that we only do finance, and it's not that we don't do finance at all. We have to do finance, but not just finance alone. So, how do we do finance? For that, we have to refer to financial statements. There's no need to explain what financial statements are. Section 240 of the Companies Act actually states that the balance sheet, P&L, cash flow, your statement of changes in equity, and then explanatory notes are included. These 5 things are part of the financial statements. Now, if you are ever asked in an interview, what are the components of financial statements? If you mention statement of changes in equity first, you'll get a slap, a real slap. They'll write rejected right there and you'll be rejected. First, say balance sheet, then P&L, then cash flow, then changes in equity, and then explanatory notes in this exact order. Always remember this. What these are, there's no need to explain. You've studied this in accounts. Here, a case study has been given where financial statements have been taken from HDFC Bank's annual report and a bit of analysis is being explained. So, whether this will come in the exam or not, I don't know. But still, it's an interesting thing to see how to analyze a company's statement, how to read it. So, like here, the balance sheet is given. If you look at the balance sheet, here it shows 31st March 2015, then 2014, so the balance sheet is always made for the last 2 years. As per the rules, you will always get such a balance sheet in real data so that you can compare what has increased and what has decreased. Similarly, you get the P&L statement for 2 years as well. Consider this as 2015 and this as 2014, and after that, the cash flow statement is also for 2 years. This applies to 2015, 2014. So how do you read it? See, you read it from the cash flow itself. If you look at the cash flow, the net cash flow, that is, the cash from operations, is high here, but some of that money is with the bank, right? So, they have to use it for giving out loans and so on. So, the money got used up in giving loans and deposits, and overall, it went negative. But by doing such business, the profit money has turned positive. So overall, by taking money and then giving loans and accepting deposits in their business, this has gone into net negative. If this is increasing, then it's a good thing for the bank. Profit is also increasing. This is evident from the cash flow from operations, and if this is increasing, it's good. If they give more loans, next year there will be even more interest income, and then we have to see where all this money has come from. Some of it came from investing and some from financing. They managed to arrange money through financing. Alright, they raised a large amount from there and distributed loans to the public. They used that in their operations. In a way, this is a slightly uncommon part of the cash flow for such banks, which you normally don't see in your cash flow statement. You people show net cash flow from operations, which is calculated after adjusting for P&L and working capital. But this part, the point of showing it, do you basically remember this? When you people normally, when you used to calculate cash from operations or work out cash from operations, how did you do it? You would take profit after tax and then make adjustments. After that, you would do working capital adjustments and then you would get cash from operations. So, we have this habit of calculating from cash from operations. But what new thing are we seeing now? Loan disbursal and corporate deposits in the bank account. So now we have to show it here, but there is no such rule. It is possible that this loan disbursal and corporate deposit, since they are balance sheet items, could have been adjusted under financing as well. That is a different matter. But the bank's policy is to show it like this, and this gives a much better picture because it clearly tells us that we have not used that money in operations. By looking at the bank's cash flow in this way, we understood that, or this also happens, which we had never studied before. So, here they have used a real-world balance sheet, and after that, you have to think about where this money has come from. Some of it came from investing, some from financing. When you add up everything net, it became negative. So, how did it become negative? So, this means that the opening cash got adjusted, and as a result, the closing cash became a bit less. If the opening was 5634, then the closing became to 76, so it decreased further. Now, if you read each item in detail, you will understand it better. I am not going into each item individually. I am teaching you how to do an overall analysis. If something like this is ever given in the exam and you are asked to comment, then what will you say? You will comment that the net cash flow from operations is coming out to be this much negative. You can also mention what it was last year and that the funds received have come positively from financing and investing activities. Because of this, the net cash flow has come out to be so negative, which, after being adjusted with the opening cash, has resulted in the closing cash. This is how you can explain it. And then, you can also do profit analysis in the same way. If you look, the profit has increased compared to last year. PBT has gone up. Alright, and the revenue has also increased. The expenses have also increased a bit proportionally. You can also show the percentage increase here, how much the revenue has increased by percentage, how much the expenses have increased by percentage, and how much the PBT has increased by percentage. Understood? If it's all okay, then everything is written here about how we do the analysis, how we analyze financial performance. We are not just looking at the raw performance. We are talking about how to do the analysis. So, it is written here that a net profit in 2015 was 5990, so maybe the figures are not fully shown here. It must be coming after subtracting. It would be 5990, which increased from 5540 in the year 2014, so it has gone up compared to the previous year. First, they mention the net profit increase of this much, then they tell the percentage. This is how analysis is done. Understand the method of analysis. First, they will mention the increase, then they will mention the percentage. Alright, what is visible in the balance sheet? It shows a cash and bank balance of 3364, which has decreased from a cash and bank balance of 7715. So why did this decrease happen? We could see that in the cash flow statement. Alright, so net profit increased by this much percent and cash and bank balance decreased by this much percent during the period, so it means that for analysis, just looking at the profit is not enough. You have to look at the profit as well as the cash and bank balance together. You need to check both the profit and the cash and bank balance. So, there are different ways to do this analysis, and every analyst does it in their own way. If you want to do some serious research on how to properly analyze this, there is a book called The Intelligent Investor. Once you pass, get this book and read it. Slowly, slowly, slowly. Alright, this book is written by the guru of Warren Buffett. Got it? It is a very popular book in the investment world which talks about how to study the balance sheet. So, how to study the balance sheet, you will get to know from here, now next after this. What did he say? He talked about cash flow. Then, we have already seen about cash flow. Alright, so you have understood how to do the analysis, how to read it. How much of this will come in the exam, that I do not know. But if it does come, how to write it is that we have to show by how much the income is increasing. Alright, then by what percentage it is increasing. And when the analysis of cash flow comes, we will also mention from where the negative cash flow is being managed and what effect it is having compared to the previous year. So, now you have got an idea. And now, after this, let us move further to see how to analyze financial performance. It totally depends on the needs of the user. That's why, what did I say? Different analysts analyze performance differently as far as financial statements are concerned. So, if someone is an investor, they will think differently. If it is a government, they will look at how much siphoning has been done, how much money has been moved around here and there to avoid our tax. If it is a vendor, then they will see whether these people make payments for their liabilities properly or not. If it is a bank, which is a lender, a money lender, then they will see whether these people are able to service the debt they have taken or not. Everyone will have their own angle, including the internal management. Suppose if there is someone from senior management and they also want to see, then they will look at what are the financial strengths and weaknesses of the company so that they can make a proper strategy. This is what the manager will look at. Alright, but everyone can use this in their own different ways. If we talk about strategic goals, then from the manager's angle, the manager will look at it in this way. Alright, it's not like only an investor has to look at it. Even the company's management has to look at all these things. Now, what are its tools and techniques? What are the tools and techniques of doing analysis? I mean, just now you used one tool indirectly, but you didn't use any tool by mentioning it perfectly and specifically. But indirectly, there was a tool here. But if we talk about proper tools, then what are the different ways to do analysis? For example, if you think about tools and techniques here, we can see one is comparative statement and the other is trend analysis. Both of these are given together. Now, if you have studied management accounting in your intermediate, then you must already know what a comparative statement is. We also call comparative statement as horizontal analysis. What do we call it? Horizontal analysis. Like just now, when we were comparing 2014 and 2015, that was a comparative statement. When balance sheets and so on are prepared, a comparative statement is made. Basically, the comparative statement is made so that we can easily compare 2 years. This is also called horizontal analysis. Well, basically what it does is there is a comparison of 2 years. We compare 2 years. Then comes trend analysis. Trend analysis is an extension. Alright, so what's the difference in this? This is also horizontal only. Alright, but in this, we do a multi-year analysis. More than 2 years, okay. Multi-year means analysis of more than 2 years. When we analyze for 3 years, 5 years or a longer period, it becomes a trend. We call that analysis trend analysis. When we do analysis for a long period, it becomes a strong analysis. Next is common size statement. Common size statement. Trend analysis is also known by another name. It is also called a pyramid. What is it called? It is also called pyramid analysis. If an objective question ever comes, then what next? Common size statement. Common size statement is also called vertical analysis. What is it called? Vertical analysis. How is vertical analysis done? This is done for a single period. It happens in a single period and in a single period. For example, if you do it here, for example, you can do it in any of them, P&L, cash flow or balance sheet, you can do it in any of them. So, you have to consider one particular item as 100% and all the other items have to be shown as a percentage of that. For example, if I take the year 2015, then in 2015, this will become 100% and then this will be divided by that, this will be divided by that, this will be divided by that, and so on. By dividing each item by that, you will get the percentage for all of them. Percent, 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 percent. In this way, everyone will get their percentage. In this way, you will get the percentage for each one. Is it okay? In this way, you will get the percentage for each one. Alright. So from that, you can understand what is happening inside the P&L. In the balance sheet, you can consider total assets as 100 or total liabilities as 100. It's the same thing. make the percentage of all the other items accordingly. This will help us understand what is happening inside our P&L. What is happening inside the balance sheet? This is called a common size statement, single period analysis. Now, along with the single period, if you want, the common size statement can be compared with the previous year's common size statement. So, you will understand, for example, what was our GP by sales last year and what is GP by sales this year, compared with previous year values. So, you can also compare the percentages with the previous year. After common size, see what is mentioned third here, cash flow analysis. So, I have already taught you about cash flow. Prepare the cash flow statement and see from where negative cash flow is being managed, where the money is coming from, and where it is going. Then what is fourth? Ratio analysis. You all have studied all this in FM. This is all part of your inter studies, right? So, you should at least have a basic idea about all this, not too much in depth, but you should have an idea. If you have notes or summary charts of ratios, they will be useful here. You will be able to understand them. So, ratio analysis is basically creating ratios between your P&L items and balance sheet items. Then after this, it is talking about trend and horizontal analysis over a period of time using common size financial statements, which I have already explained to you here. And what do you ultimately do with all this data? You can compare the data of one company with another company, or even within the company, you can compare the data of one division with another division. This helps you understand what your standing is. In business, where are our strengths and where are our weaknesses? And by identifying this, we have to do future planning, make strategies, which product is weak, which region is weak, which division is weak, which division is performing well, where there is more scope. We can get all these ideas here. Right? When we do ratio analysis, we get to know many dimensions of the company, like how the profitability is going, whether the sales being made are recovering the costs or not, how the company's activity is going. Remember, there were activity ratios: debtors turnover, creditors turnover, finished goods turnover, that is, stock turnover. These are activity ratios to see whether everything is running on a regular basis or not, whether production is happening or not, whether goods are being sold or not, whether debtors are paying up or not, whether payments are being made to creditors or not. Then there is the liquidity ratio. Liquidity ratios are normally for short-term liquidity, which we use to check through the current ratio and liquid ratio. Then there is the solvency ratio, which indicates the long-term position, how you are maintaining your debt ratio, equity ratio, or proprietary ratio in the long term. And from the investor's angle, there are some investment ratios that look at the yield, like dividend yield, earning yield, payout ratio, return on equity. So, the investor wants to see if we invest money in this company, how is it performing? How it is performing? How it is performing? All right. So I hope you have understood this, and all of this was actually part of your intermediate syllabus, so the same things have come around here as well, and the entire discussion has just been printed here while explaining the same concepts. So I have explained it to you in short in this chart format, and the same things are written here as well. You people don't need to go too deep into it. In cash flow, two types of cash flow analysis have been explained. One is FCF and the other is FCFE. Free cash flow for the firm and free cash flow for the equity. So I will not discuss these two right now. This will be covered in our BV. Alright, we will discuss it in BV in the business valuation part, because there we are going to have a very in-depth discussion on this. So here, there is some discussion about it, some examples as well, which I will not cover here. You have to do this in the VIF. Alright, in business valuation there is a separate dedicated chapter on this, so we will cover it there. The examples are also very easy. If you learn the concept there, then this will become very easy for you, and I have already explained ratio analysis to you. So basically, what we will do now is, based on whatever we have learned here, we want to solve some of the questions related to this. There are a few questions related to this that we want to solve, which have also come in the exam and are given at the end of your maths book at the end of this chapter, so we would like to do those as well. Except these two, because these will come in your business valuation subject. Alright, so from where will we do the questions? Let me tell you, you will get separate notes from us for the questions. You have to solve the questions from those notes, though the questions are from here only. Also, whatever questions have come in your past exams, we have included all of them, so you will get separate notes for those, and you have to do the questions from there. SPM is mostly theory, so we want you to study the theory from the institute material to get a good grip and use the correct words, so that your preparation gets a good flavor. But keep in mind, it's not necessary that the questions in the exam will only be asked from the institute material. They can also bring questions from somewhere else and ask. But at least, we should do the minimum from the institute material, past papers and model papers. Alright, so open the notes that we have given you and get ready for the questions as well. Okay. So here are your notes which we are going to provide you for every chapter. Alright, so leaving aside the theory part for now, I am explaining the practical part to you. If you pay attention to the practical part, there are some questions like this one here. You have to prepare a cash flow statement in this, and you already know how to make a cash flow statement normally. So you should try to see if, with the knowledge you have gained so far, you are able to prepare the cash flow statement or not. Pause the video and try to do it yourself. It is going to help you a lot, and if you just mug it up, it won't be as effective. But you won't enjoy it. If you just mug it up, then fine, you'll get it done. But you won't enjoy it. Pause the video and try it yourself. I think you can do it easily. If not, wherever you get stuck will be a new learning for you. Getting stuck here is not a crime. Your only struggle is that you keep saying, "Brother, I don't have time, I don't have time." So, brother, are you busier than Modi ji? Are you running the whole country? You don't have time and still you want to study. You want to get a degree, you want to change your life, so tell me, how will that happen, brother? You will have to make time for it. So right now, I am assuming that you have tried this on your own and now you want to cross-check it. Because the solution is not given here, so let me help you cross-check it. So the first question here is, explain the change in cash. So, only when the cash flow is prepared, we will be able to explain the changes. Second is change net working capital. Here, the income statement is given and below that is a balance sheet. Then it asks about the cash flow generated by the firm's assets during 2022. You have to provide the cash flow statement and the change in net working capital. So, when we prepare the cash flow statement, we do not include cash in net working capital. You will have to take other current assets under current assets, and for current liabilities, you will take accounts payable. That means these items. Alright then, let's solve it. Solution to question number 1. So, when change in working capital is asked here, since cash flow is required, you have to take it excluding cash. Remember, you have to exclude cash and bank. Now, we didn't know this earlier, so this is exactly what we had to learn, right? So, how do we calculate working capital? Here, data for 2 years has been given, 2021 and 2022. Current assets are 185, 170, and in current liabilities, there is only one, accounts payable. 140 and 125, so working capital is 45, 45. So, the change in working capital is nil, there is no change. There is nothing in the change in working capital. It is blue. There is no change. Now, what do we have to do in the second part? We have to prepare the cash flow statement, and for the cash flow statement, we have three parts: cash from operating activities. So first, we need the profit. So profit. If you study by subtracting expenses from revenue, whatever comes is the profit, right? So what is the benefit of this? You won't have to make any adjustments. If you subtract this, you are getting to 10. If you take the entire net income, like it is given here, after subtracting from this you get net income, then if you subtract the dividend, ultimately your final profit transferred to the balance sheet will be considered. Alright, so that will be 120 minus 95, which is 25, so this should be shown in the balance sheet. If you look at the balance sheet, here shareholders' equity is given. This means this is equity share capital plus this profit, and it is not just the capital. What's capital? It's share capital. Since it is written as equity, it should include your reserves as well. So this is also something that doesn't come to mind. You might be treating shareholders' equity as just share capital. Alright, when you try it yourself, you realize what shortcomings you have. If you just keep listening and memorizing, you won't know what your weaknesses are. There could have been a mistake here. If you start the cash flow with 25 and add back all the items, you must reach to 10. So, if we are directly getting the profit from operations, which is equal to sales minus operating expenses excluding depreciation. Or you can say, sales minus cash operating expenses. So, we don't even need to adjust for depreciation. It will be 210. Then add or subtract the working capital adjustments. If current assets decrease, add it. If they increase, subtract. If current liabilities increase, add. So, what's the shortcut? For example, if I tell you a shortcut for change in working capital, we add decrease in working capital and subtract increase in working capital. If we do it on a net basis, then this is the shortcut. So, in the current case, since it is nil, it remains 210 only. So, after making this adjustment, we get cash from operations. Alright, what will we call this? Cash from operations. From this, subtract the tax paid. But if you don't have information about the tax, then just leave it. Number 2 will be cash flow from investing activities. What will be number 2? Cash flow from investing activities. So how will this come? For investing activities, we don't see any details here. Alright, if any income was received, we would have included it under investing. But we will have to prepare the accounts. For example, apart from cash and current assets, if we prepare the account for fixed assets, it becomes a part of the working note where you go below and make the account, which helps to identify if there are any other hidden cash items elsewhere. We have opened the fixed asset account. Check the opening and closing balances. You are given the net fixed assets. That means depreciation is already adjusted in this as per WDV. 405 and 385. So, the balance brought down is 405 and the balance carried down is 85. Alright. After fixed assets, what else has been given to you and whose account can be made? Payables account will not be made because that has already come under working capital. Accounts for long-term debt and shareholders' equity will be made. Long-term debt and shareholders' equity. So, we can write their opening balance and closing balance. The opening balance of long-term debt is 160, closing is 150 and it's 370, 340. What is its opening balance, BD? It is 160 and the closing balance, CD, is 150. On the opposite side, it is 370 and 340. Alright, so now based on this, we are going to write everything. When depreciation is given in fixed assets, the depreciation is 90, so it will come on the credit side of fixed assets. By P&L, write depreciation as 90, so after accounting for this depreciation, the account will be balanced, and since the balance is coming here, 70 will be considered as purchase. Cash will be considered as long-term debt repaid. Cash repayment has been done, cash or bank. You can write anything, but writing bank is more appropriate. So this 10 has come, and the net profit in shareholder equity will come from the P&L first, which is 35. The net profit that came was 35. You will have to calculate this 35. Alright, how did this come about? You had to calculate the entire net balance of the P&L, and after that, you will balance the accounts. So now, since the balance is coming here, we can assume that maybe some shares have been bought back. When you subtract this from 370 plus 35, how much is left, brother? 55 is left. Okay, so this is the work of finding hidden items, and now you have to arrange them here. What is happening in cash from investing activities? Fixed assets are being purchased. For how much? For 70. Then that's it. Just one outflow, then comes C number. Cash flow from financing activities. So, what all is happening in financing activities? We have repaid debt, long-term debt repaid. 10, then we did a share buyback. We did a share buyback. For how much did we do it? 55. Then what did we do? Dividend of 95 was given. Dividend paid is 95. The effect of the dividend does not come into the account. A separate dividend account is opened. So if we add all three, how much does it come to? 95, 100, 150. It comes to 160. This is also negative. Everything is repaid. The money has gone out. Alright, so by adding these three, what will be the net cash flow? Net cash flow. If we adjust 230 and 210, minus 20 comes. In this, we will add the opening cash. If you see the opening cash, it is 80. If we add 80, the result is the closing cash. It matches, so the question says to explain. Explain the difference in cash. So how will you explain it? How were you reading the cash flow? The difference in opening and closing cash of 20, which is 20 negative, which is coming due to 2-3 activities, cash from operating activities, 210 positive cash flow is coming, whereas investing 70 is the outflow from investing, and the financing outflow is 160, resulting in a net change of 20. You just have to explain this. Alright, so I am not writing the explanation. But you have to write it yourself as well. Just listen to what I said, alright. So, try to write this on your own. Whatever I have said, just go back, listen to it again, and write it down in the statement. Shall I say it once more? Let me repeat, the net change in the cash balance is negative 20, which is an outflow. This can be analyzed into 3 activities. Number A, cash flow from operating activities is positive to 10. Cash from investing activities is negative 70, whereas cash from financing activities is negative 160, resulting in an overall net balance of negative 20. That's it. This is the explanation that will go. Okay, analysis over. So, sir, will this kind of question come in the exam? I don't know. Since the institute gave it in maths, we are not ignoring it. Not sure. It hasn't come so far, and as I told you earlier, repeats are very rare. If you are thinking of scoring good marks, then you will have to study everything. There is no rule that you should study only what gets repeated. So pause the video and first write down that explanation, then move ahead. Now let's come to question number 3. This has also been taken from the Maths of Intermediate. If you have studied management accounting in intermediate, then this is the same question for you. But if you haven't studied it, you will learn it now. So this question 3 is teaching you about comparative statement analysis. So what is given here? You should pause the video and read it yourself once. What is given? You should pause the video and read it yourself once. Then you should listen to me. If you listen directly, it won't be as beneficial. If you want real benefit, then pause the video once and listen. Alright, pause the video, read everything properly, and then listen. Let's go. So, I'm assuming that you have read it yourself and come back. Can I assume that? You will have to read. No excuses will work. No judgments will be entertained. You will have to read. Whatever sir is saying, you will have to do that. So now, what is being said here? Look, there are 2 companies. There is one company. It has details for 2 years. The company has details for 2 years. Turnover, cost of sales, GP came. After deducting expenses, NP came. Mr. X, the owner, is happy that the net profit is maintained at the same percentage. So if you calculate the net profit percent, it comes from sales. Here also it is 10% and here also it is 10%. So he is just happy that we have earned the same percentage of profit. But his brother, Mr. Y, who is currently doing a CMBA from a reputed institute, would like to look into the numbers. So the MBA brother comes and thinks, let me see, sir, what is the matter? What do you think would be the analysis to be made by Mr. Y regarding the numbers? So what further analysis can he do? So here, in the analysis, a common size statement can be prepared that individually if this is 100, then what percentage is this? You can calculate its percentage accordingly, this one's percentage, that one's percentage, and similarly, you can see here as well, if this is 100, then how much is this? How much is coming as per sales? You can compare those percentages by looking at them. You are required to show the calculation which is recommended to give insight into the profitability as suggested by Mr. Y. Do you think that the views of Mr. X are factually correct based on your reconciliation? Here, more details could have been written about how Mr. Y wants to do the analysis, but all that is not mentioned, only this much detail is given and you are being asked, tell what should be done. So, what we can understand here is that we can do further analysis like this. If in year 1, sales are 100%, then if I convert 42,000 as a percent of sales, it comes to 42,000 divided by 70, that is 60%. So, the gross profit comes to 40%. Then, further, if we do 21,000 divided by 70,000, it comes to 30%. So, the net profit is coming to 10%. After this, if we go to year 2, this is 100%, this is 55%, and this is 45%, this is 35%, and this is 10%. Alright, how did this come? This 100 means 55 by 1 lakh, 45 by 1 lakh, 35 by 1 lakh, and so on. So, we call this a common size statement. What do we call it? A common size statement. But we prepared this for 2 years. Common size statement. For how many years should we prepare it? We prepared the common size statement for 2 years. Now, with this common size statement for 2 years, we can do some analysis. If we look at the money here, our cost of sales has decreased by 5%. So because of this, our gross profit has increased by 5%. But that has been offset by the expenses. Expenses have increased by 5%, so our profit has remained the same. We can write this analysis that because of the decrease in cost of sales by 5%, the gross profit has increased by 5%, whereas due to the increase in expenses by 5%, the net profit has remained the same. Alright, now further you can also do comparative analysis, so the common size is done. Now you can also do comparative analysis. What comparative analysis will you do that if our sales increased from 70,000 to 1 lakh on a day-by-day basis, then how much percentage has it increased? Should I calculate it? If sales have increased from 70,000 to 1 lakh, then by what percent have they increased? So, 1 lakh minus 70,000 divided by 70,000 comes out to 42.85%. Sales have increased by 42.85%. So, by what percent has our cost of sales increased? 55 minus 42 divided by 42, it comes to 30.95%. This is how a comparative statement can be written. Alright, so by how much percent has the GP increased? The difference between 28 and 45 is 17 divided by 28, which means GP has increased by 60%. GP has increased by 60.71%, and by what percent have the expenses increased? 14 divided by 21 comes to 66.67%, so expenses have increased by that much. Alright, and by what percent has the net profit increased? 3 divided by 7 comes to 42.8586% for net profit. Now, we just have to convert this into a writing pattern. There is a system for how to write the answer. Read the question, then write the answer. What is the question asking? What do you think would be the analysis to be made by Mr. Y regarding the numbers? So, what analysis can Mr. Y do? According to me, he can do common size statement analysis and comparative statement analysis. He can do only these two analyses. He cannot do trend analysis because here, details are given for only 2 years. So, what analysis can he do? Common size statement, comparative statement, and one trend analysis. He can do 3 kinds of analysis: common size statement, comparative statement, and trend analysis. Got it? So after that, what does it say? You are to show calculations which are recommended to give an insight about the profitability as asserted by Mr. Y. So you have to show its calculation. So you will show this working note 1 of the common size statement, and then after that, you will write the comments for it. After showing this, you will write the comments, or instead of calling it working note 1, you can just write the normal common size statement and then write its comments. Then you will write the comparative statement and its comments, and we cannot do trend analysis because here we have data for only 2 years. So this will be the answer to the second part. And what is being asked in the third part? Do you think the views of Mr. X are factually correct based on your reconciliation? So what did Mr. X say? That the net profit is at the same percentage. Net profit is maintained at the same percentage. What is the net profit here? It is maintained at the same percentage, and that reconciliation has already been done here, 10 and 10. So from that also it is clear that yes, this is correct. So Mr. X's view is correct. This has to be written in the third part, so how to present it nicely, let me explain once again. For example, in part A, you have to write like this: Mr. Y can do common size statement based analysis and comparative statement analysis. Okay, I haven't written comparative here because in the Institute solution, comparative analysis has not been mentioned. That's why I haven't written it here for you. However, if you were not aware of the Institute's answer, you would have written both comparative statement based analysis as well as common size statement based analysis. Did you understand? Mr. Y can do common size statement based analysis and comparative statement based analysis. Mr. Y can do common size statement based analysis and comparative statement based analysis. Now, if you have to write about it in detail, then in part B, you can show it as a working note or you can show it under a heading. If you are making a full common size statement, then you can show the percentage column or you can write both rupees and percentage. Just copy the rupees given here. So by writing both rupees and percentage, you can also prepare the common size statement and then you will write the comments. How will you write the comments? For example, the cost of sales has decreased by 5%. That is why the gross profit has increased by 5%. Expenses have increased by 5%. That is why net profit stayed the same. These are the comments you need to write. What should you write? It says the cost of sales fell by 5%. So, gross profit rose by 5%, expenses also rose by 5%, and net profit stayed the same. Write this analysis, and when you prepare the comparative statement, also write comments for that. For that, you will write the comments line by line, like sales has increased by 42.85%. Cost of sales has increased by. You are understanding how to write it, right? How to write its comments like this: increased by 30.95%, GP has increased by 30.95%, GPE has increased by percent. Then, expenses have increased by percent in the same way. Net profit of 100 as increases by percent. In this way, you have to comment and conclude. This is how you have to comment and conclude. Alright, so this is how you write comments for the comparative statement, and these are the only two we can do. Understood? If we do common size or comparative, then for comparative, you have to do the working and analysis, that is, write the comments, and then in part C, check whether Mr. X's view is correct or not. We will comment that Mr. X's view is indeed correct because Mr. X's net profit percent is actually coming as shown, which is reflected in the common size statement. So, there is no need to calculate the net profit percent again. You can write your answer by referring to the common size statement. So, this is all a part of part B. Alright, just like I have written the common size statement here again, if you have to write the comparative one, you will have to write it here as well. So, how will you present it? In part A, you will write this. In part B, now suppose you write this one if you are going for the common size, and you write this other one if you are going for the comparative as well. Since the question is not clear here, in the exam we show both. Alright, in the exam we show both. In part B, we show both a common size and a comparative, and we also write comments for both. And for part C, we show this. So this is its presentation. Now, if you look at the Institute's solution, see how they have done it. They have done it in a very easy way and haven't presented it very well. Logically, they have just mentioned the percentage of net profit. They said it has increased in absolute terms. Then they mentioned the gross margin percentage, calculated and showed it, and said, look, there is common size analysis and trend analysis. They wrote the whole theory, which was not even required, and showed vertical analysis. What is required is to show things like common size, etc. It was written cost of sales fell 5%, expenses rose. This is needed. This is also fine. It says the three main purposes of a common size income statement are comparison, cost structure, and profitability evaluation, but these don't need to be mentioned here. It was explained why trend analysis can't be done, as there is no data for more than 2 years. So according to me, there was no need for these details. Since it was printed in the Institute's answer, I removed it. I told you not to write this, but now what you have to write is not so brief and organized. That's why I explained this presentation to you. Have you understood what you need to do now? Pause the video and make a copy for yourself. Alright, you will need one notebook. You have already made it to solve these questions. So in that notebook, you will write this in part A, then in part B, write both of these and add comments and sentences. Write in proper sentences, not just a short note or something like that. Write comments in proper sentences, and then in part C, write MRX correct like this, where it is written about net profit percentage and maximum common size statement. Have you understood? CSS means common size statement. So, this is the level of presentation I am expecting from you. I hope, as final year students, you are not thinking that I will hold your hand and make you write everything, only then you will do it. So now you have to pause this video. Complete the entire presentation for this and then move forward. Will you be able to do it? Everything has been explained to you very clearly. Wherever it is necessary to do the entire thing, I will make you do it, just like I did in cash flow. But here, there is no need for that. Here, I have given you the complete idea. Now you just have to elaborate. Do it. Come on, the next question is question number 4. Have a look at this. First, understand everything with me, then worry about writing it down. First, focus on understanding. So here, two balance sheets have been given. 22 and 30, assets for 22, assets for 30. In equity and liabilities, it is given as share capital, then equity shares, suspense, equity share warrants, reserves and surplus. Then see what is given, non-current liabilities, then current liabilities, then assets, then non-current investments, then current assets, and adding all these together gives the total. All of these together make up the total. Alright. $58,600, $76,000, $74,919 is the total on the liability side. Then what is it saying? How would you prepare a common size statement or common size balance sheet of Maruti Limited and interpret the observations? So, how is a common size balance sheet made? It is made by considering this as 100 and then making the rest as a percentage of this total. Here also, consider this as 100 and make the rest a percentage of it. Then make this 100, then this 100, and for the rest, divide by this and calculate the percentage. Divide this by this and find its percentage. Like this, it will keep moving on. Did you understand? It will move on like this. And then what do you have to write in the observation? When you make the observation, you have to write line by line that equity capital is this much percent of our total capital or total liabilities, okay? And you can also compare it with the previous and next year. For example, if it is 22 here and 30 there, then in the next year the amount has increased by that much. The percentage has increased by that much. So how do you do it? Look, the calculation has already been done here. It's a very easy one. There's nothing to think about in this. You see, the total has been made 100 and then everything has been divided by that total to get the percentage. In this way, everything has been divided to get the percentage. What do we have to do after that? After that, we have to write the interpretation. So how should we write the interpretation? Here, you have to mention each item one by one. Equity share capital has decreased from 1.18 to 0.97. Share suspense has decreased from 0.051 to 0. Share warrants have increased from 0 to 1.123. Reserves decreased from 53.27 to 52.265. And secured loan has decreased from 8.154 to 4.405. Up to how many decimals should we take the values? Normally, we take only up to 2 decimals. Here, it has been given up to 3 decimals, so 3 decimals have been taken. So you can go with 3, but 2 is enough. Usually, we are a bit wary of the checkers. You can't really trust people. It's just their mischief, nothing else, so that's why it's been done up to 3 decimals. Keep this in mind as well. Then we'll talk about fixed assets. Similarly, we'll talk about capital VIP. In this way, you will have to write comments line by line for each item. See how it was written here. The proportion of secured loan is shown as increasing from 15.5 to 19.94, right? Now look here, son, if you go down, it has gone to 2 decimals. Alright, then the proportion of secured loan to advance to balance sheet has fallen from 8.15 to 4.405. If you understood, then you can also find out the reason for that. Why would that have happened? It must have been repaid due to repayment, so due to redemption of convertible debentures and repayment of term loans, right? How did it happen? It happened due to redemption. How did we find out what was inside it? What was inside it? It's not even mentioned here in the question. And in the answer, they somehow know that it's due to redemption of non-convertible debentures and term loans. They've just written it from their own understanding. So, we can just write in our answer that it's due to repayment, but we can't specify exactly what all has been redeemed. Then, what can we say for reserves and surplus? What was it before? It was 53.27. Now it has become 52.27. So it's nearly flat, marginally reduced from 53.27 to 52.27. In this way, you have to write for every item. Then there is current liabilities, deferred tax, net fixed assets, capital WIP, investments, current assets, loans and advances. For every item, you have to write one line each. Now you might say, "Sir, it would have been great if you had made me write this in my notebook." I would have done it even better. I know that the thing is, many students have already done all this in intermediate because now it has been included in management, accounting and FM at the intermediate level. It has been included in FM at the intermediate level. Not in management accounting, but it is included in FM, so students have already done this common size analysis and many have done it in BCom too. You might have forgotten it. If you don't remember, at least you were told about it once. You've seen it, understood it. Now you have to try writing it on your own. If it doesn't happen, then I am there, right? Isn't it? So, what do you have to do now? I am giving you complete direction. You just have to put in a little effort yourself. What will be the benefit of this? You will learn more, and one benefit for me is that it saves me a bit of time in class. With this excuse, I will be able to deliver the course to you faster. That's the only benefit for me. Now, if you say that I should make you write and solve the entire sum, then for just this one sum, it will take me another 45 minutes, and I'll have to sit with you for 45 minutes. So, overall, if we keep doing this, I have no idea how many hours of content will keep increasing. So, what I would prefer is to explain more sums to you and ask you to try solving them on your own. Especially those things which have been coming from earlier. Especially the basic things for which I don't even need to give much explanation. Alright, it's not that I will do everything like this. Don't think that the entire book is going to be covered in this way. It's not like that. Some sums, if you trust me a little and give me some relaxation, then I would be able to give you the content within your expected time. Otherwise, I will have to sit with you to solve these sums completely. You might feel that, yes, my work is getting done along with the video, but in the end you'll say, "Oh, how long is this video going on? How much more is left?" Try to understand my point. So what you have to do now is, I am once again explaining the presentation to you, what you need to do in your notebook. You will make a common size statement, and how will you do it? You will copy the entire balance sheet. There are 2 years here, if you can see, which are 22 and 23. So, you will make columns like 31st March 2022 and 31st March 2023. In these, you will take rupees and percentages, rupees and percentages. Then, for 31st March 2022 and 31st March 2023, you will take the entire balance sheet given here, starting from equity and liabilities, and put all of that here. Alright, in this way, whatever total liabilities you are getting, I have written equity and liabilities here, meaning whatever is given here, it is written as equity and liabilities, but everything will come under it, non-current, current, everything. So, non-current liabilities, then current liabilities, all the items given. You have to take all of them and total them up. Take all of these and total them up and consider this total as 100%, alright. And by dividing all these values by this total, you will get a percentage. By dividing this value by that, you will get a percentage. You have to calculate that percentage, which has already been done here as well. You should not just copy that, you have to do it yourself. Alright, and after this, you have to do the same for the assets side as well, so the details of the assets will also be done in the same way. Exactly the same process. There's nothing to it. Once you've practiced, then for each item you just have to mention whether that particular item has increased or decreased in comparison. For example, what happened from 2022 to 2023? Did it increase or decrease? And the idea for that has been given here under the heading Analysis. There could be reasons for it as well, but since there are no details, we won't mention the reasons. We'll just state how much it has increased or decreased. So, in the second part, comment on the increase and decrease of each item and the increase or decrease in percentage for each item. That's it. Now you have to struggle with this, brother. You are a final year student. Don't expect so much hand-holding from me. When it comes to final level studies, if there's something really important or something I feel I must do, I will definitely do it. Don't think that, "Oh, sir just teaches like this, just shows the question and then says do it yourself." Do it yourself. When I say do it yourself, it's actually for your own good. My students have become champions at this technique since intermediate. Those who are studying from intermediate onwards. My teaching method is a new technique. Those who have been studying with me since intermediate, recently, all of them have become champions. They have understood the do-it-yourself theory so well that I can't even explain it to you, otherwise students usually just have a tendency to copy. They just copy whatever the teacher is writing, their mind is somewhere else, busy on their mobile, just copying for the sake of it. Now, there's no scope left for just copying. Yes, you can still copy because the solution is printed there. But you won't enjoy it if you just copy from the solution. You have to do it yourself, take the calculator and solve it, right? If you listen to the teacher this much, you'll become a good student. So, when should you do it? You have to do it right now as well. Pause the video and do it. Sir, this way the time for each class is increasing a lot. Ale, if you keep complaining about time like this, you won't be able to learn anything. If you want to learn something good, you will have to give time and you can finish your studies along with the class itself, along with the class. I am telling you, pause now and finish it. Okay. Come, let's move on to the next question. What is written here? From the following income statement, illustrate a common size statement and also interpret the result. So, what is it again? It is a common size statement. Again, what is here? Common size statement, what is given here? Common size statement once again. All right. So, this is nothing at all. After doing the small one above, you won't feel anything about this. So, how is it done? This is the common size statement of the profit and loss account. The common size statement above is of the balance sheet. Here, let me write it down. This is of the balance sheet. So, how do we do this? Just like in the balance sheet, we make total assets equal to 100. But what will we do in this case? We make sales equal to 100. This is 100 and that is also 100. We have already done that in the question above. So, present this now. Start doing it in your notebook. Do it yourself in front of me. I mean, in front of me means pause the video right now and do it. All right. Wait, I give you a structure on how to do it so that it becomes easier for you. But you have to do it yourself. I won't do it. Okay, I will explain everything to you. I will encourage you so that you can do it on your own and you will be able to do it. Even if you are reading this for the first time, you can do it. It's not a big deal at all. So, how will a flow be created in this? First, you will make a common statement. Try to understand the structure first. 2023, 2024, then you will add two columns, rupees and percent, and then again rupees and percent. Now, what will happen after this? For example, net sales is given as 1050. You will consider that as 100% and you will also consider this 1350 as 100%. Then what will you do? Less COGS. For example, 570 is given, so you will calculate 570 as a percent of 1050. So, how much does that come to? 570 divided by 1050, which comes to 54.29, right? And here, 645, then you will divide it by 1350. First, understand this, then we will write it down calmly. If you do 645 divided by 1350, it comes to 47.78. You have to do this for all the other items. It's very easy, just relax. You just have to calculate the percentages. Now after this, you have to write the interpretation. Let's write the interpretation together, okay? Let's write the interpretation together. First, pause the video and complete this statement as I have given you the framework. Start from here and go up to PBD. Don't just copy what's printed in the solution. Look at the question and do it yourself. Do it. Pause the video and do it right now. Alright, now I am assuming that you have completed it, right? You haven't just paused, you have actually done it. I am assuming that. So now, after this, it is very important to write the interpretation. How should you write the interpretation? Just like we wrote the interpretation earlier, you have to write it in the same way, mentioning by what percentage our cost of goods sold has decreased. Then, by what percentage has our GPM increased? If I look here, you can see that from 54.28 and 47.78, the difference comes to 6.51, right? So, it has decreased by 6.51%. What has decreased? COGS. Now, if you look at the GP, it has gone from 45.7 to 52.22. If you subtract 45.7 from 52.22, again you get 6.51. So, if you calculate the GP, you will get the same 6.51. This cost has decreased and because of that, the GP has increased. In the same way, you have to look at other operating expenses as well. So, I want you to look at the percentage here once to understand. I have ticked the percentage here once because it gets hidden. So, the value given here, if you compare the percent, it comes to 6.51%. Here also, for GP, it is coming to 6.51%. This is decreasing, that's why the GP is increasing. What is happening with other operating expenses? 16 minus 14.29 gives 1.71. There is an increase of 1.71%. Operating expenses, operating profit, 36.22 minus 21.43 is 14.79, risen from 11 to 14.79. Then, what is happening with interest on long-term debt? 5.71 minus 3.7 comes to 1.9, so it has decreased from 1.93. And by making 25.71 minus 32.44, it got increased by 673%. Okay, so it has increased from 6.73%. So now, let me explain how you have to write this in the comments. First, understand before writing. Don't rush or copy blindly. If you don't get it, having it in your notebook won't help. We don't want you to be in that situation, so let me show you how to write it. In the solution, I've written 3 points for you as reference. Cost of goods sold fell from 54.29 to 47.78, a 6.5% rise. GP, gross profit, rose from 57 to 152.2, a 6.5% rise. If you can cross-link, that's good. This is because reducing COGS increases GP by the same amount. Then other operating expenses increased by 1.71%. Other operating expenses have increased by 1.71%. In the same way, you have to write for all the items. Operating profit increased by 4.79%. Interest on long-term debt decreased by 1.93% and profit before tax increased by 6.73%. When writing, don't just mention the net change, give full details. If it changed from here to here, then this happened, and so on. Cross-linking is even better. Like what is written in GP, duty, direction, N, C, or G, S now in NPA, you can write in operating profit. Why did the operating profit increase? Why did the operating profit go up? If you can cross-link, then what will you say? Operating profit. It increased because our base GP is higher, but operating expenses have also gone up a bit. So after setting off, operating expenses have increased as a net percentage. Why did PBT increase? Because interest expense has decreased, so PBT has gone up. If you can make a cross-link, that's very good. If not, it's okay. This is the Lala line surplus. No need to write this. Leave it if you have understood. Similarly, what will you write in the fourth one? I am just giving you an idea now. Don't copy it yet. You have to write it yourself. After operating expenses, write about interest and operating profit. Then, for the fifth number, write about interest, and for the sixth, write about PBT. For every item, if you have to write the reason for the increase in PBT, then it is due to reduction in interest. PBT percentage rose slightly and remained higher. If you have to write the reason for the increase in operating profit, then it is due to increase in GP, adjusted by increase in operating expenses. So, write it like this: due to increase in GP, adjusted by increase in operating expenses. Okay. So, it is expected from you that now you have understood this, so write it on your own. Don't worry about grammar. Don't copy from the solution. Try to produce it yourself, and there is no need to show it to me. It's not like it's rocket science that you have to show it to me. If you do cross-linking, that's good. The answer is going to the next level. This is the point about cross-linking. Now, what further value addition can be done is that you can also think about why this COGS might have decreased. Although there is no information in the question, how does the COGS of a gas company decrease? If asked this in tomorrow's interview, what will you say? Saying, I don't know, means you haven't revised. You can't just wait for the answer. You will have to do a bit of guesswork, right? So, the reason for COGS decreasing could be that the input has become cheaper, efficiency has improved, or wastages have reduced, so you can mention those reasons as well. What could be the reason for the interest decreasing? Interest decreases when the interest rate has been reduced, maybe after negotiation. It could also be that the market-driven interest rate has come down, or perhaps some of the debt has been repaid. So if you can find the reason behind each and every item, then that's excellent. It will be like icing on the cake. So, what the institute expects from you isn't always clear what they expect. Because sometimes there is something different in a question. What I expect is that in the exam, if you are rushed and can't think much, you should be able to elaborate on whether this percentage is increasing or decreasing. Like take the simple example of cost of goods sold. You can try to connect it from the top or bottom. And this will reach a third level where you can suggest a reason for the next level about which nothing has been said. That's it. So here, we are thinking about what the reason could be. Due to reduction in, increase in input cost, lack of efficiency, well, this is not exhaustive. There could be many other reasons which we may not even know. Here, why would this reduction have happened? Due to repayment of debt. Now, how did the debt get repaid? Because here, the operating profit increased. So, money must have come from that. From operating profit, from higher profits, higher operating profits. So, this becomes a next level interpretation. How did PBT increase? Because interest has reduced, net profit has increased, which means operating profit has definitely increased. You understand my point? Now elaborate. I'll repeat it again. Just write it during the match, no need to show anyone. Focus on building your confidence, nothing can go wrong here. Gradually, your confidence will grow. Remember, prepare and coach yourself. There is no point if I just say it and leave. How will you be prepared? Be a good student. If you trust what I say without judging and do what Sir says, you will start getting ready. So you'll begin to prepare yourself. You don't have the habit of studying. I know that. But this is the best way to study. So what do you have to do? You have to listen to this again now and then write it properly in your notebook. What you need to hear is, first, we write about CGS, second, link GP, third, expenses, fourth, link operating profit, fifth, interest, then PBT, all right. If needed, we will cross-link them. And if my mind is working, we can also give further judgment on any item showing a change. But that's optional. For example, anything in red is for your knowledge but optional for the exam. When you read the Institute's solution, you'll see what I wrote in red is included there. If we skip it on the exam, we might lose some marks but won't get 0. But you're not sure, if you write something wrong or random, it will create problems. So whenever there is noise, write down the pressure on some points. Here, PV2 shows net sales increased from 25.7 to 32.4. Because of this, the company's profit earning capacity increased, cost of goods sold reduced, possibly due to lower input costs and better input efficiency, so efficiency has improved. If your operating expenses are higher, it means you must have implemented good supervision or systems or hired employees, due to which this impact has come on COGS. This suggests something new. There was tight supervision and control, so operating expenses increased and COGS decreased. Anything could be the reason, we don't know the cause. How should we think about it? Interest on long-term debt declined, reducing the financial burden. When the financial burden drops, financial risk also falls. Where was repayment made? The repayment was made from the higher operating profit that came in, so it's very good to know this. At the very least, you should write down what I have shown in blue, so go ahead and write that. And the extra knowledge that needs to be written, I have already written it here. Make sure you also note that down in your copy. Note this in your copy as well, repayment of debt from higher operating profit. As a result, financial risk has been reduced at this point too. Why have I written it in red? Because you should also write it in red, since generally we don't get this in the question. So, you have to find and write this on your own, and according to me, this is optional. Alright, so complete this entire part up to the interpretation. Make sure you finish everything up to the interpretation. Now, let's look at the next question, which is number 7. What exactly is it saying here? Khurana Enterprises started its business operations in the year 15 with an initial share capital amounting to 10 lakhs. However, some of the relevant data is not provided or given in the table, right? So let's start arranging the data. This is the way to approach the question. 10 lakhs. In the last 7 years, the performance of the company was financially sound. Hence, at the end of the year 2022, the directors of Khurana decided to expand the business. So just think, expansion has to be done here. Then, rows, return on capital employed is 15% in 2021. The rows that is given, it says 15% in 2021. Later the toll became 0.9. Then, similar firms have an average of 11%. For similar firms outside, their figure is only 11, while ours is still higher. The gross margin ratio or GP ratio has also decreased. The operating ratio, calculated as expenses to sales, fell in 2022 by 1%. The operating ratio compared to this fell by 1%. So, it decreased by 1%. The GP also decreased, but by how much is not specified. The current and quick ratios are constant, the current ratio is the same, and the quick ratio is the same. But there has been a deterioration in the stock turnover and debtor turnover ratios. The stock turnover ratio and debtor turnover ratio have fallen. Then it says the company did not use any long-term loan in 2022, but 6% venture was issued of 5 lakh in 2023 to expand. So here debt was taken. It was not taken earlier, but in 2023 it was taken. Then it says the company is in the highest income tax bracket, however, it is not in search. Okay, it pays the full income tax as well. So, is the decision of the director for expansion justified? What are the chances of further growth of the firm? See, you are an intermediate only. No, you only need to calculate the ratio or say if it increased or decreased. The full analysis is in this is the final level. This subject teaches you something. You should be grateful that this subject gives you so much knowledge that you can go and use it in the real world. I mean, you studied FM, but not from this angle, right? First, now tell me, after looking at everything, the expansion that we want to do, is it justified or not? So, I feel that the expansion here is justified. Why do I feel so? Because our RC comes better than the industry. We are able to earn more than the industry. Even though there is a decline, but still we are earning more than the industry. So by way of expansion, we will be able to deliver more returns to our investors. Now, to do this expansion, what happened is that we took on debt, and before this, we had never used debt.
So, this is also not something to worry about. Because we have taken on debt, we should have the capacity to repay it.
If we have taken debt, what should we have? We should have repayment capacity, right? We have repayment capacity because of high ROE. So do we have the capacity to repay our debt? Interest in the highest tax bracket gives us a benefit because of the debt. Interest is paid on the debt. There is a tax benefit on interest, so with the debt, we get a tax benefit and the debt rate is 6% while the ROC is much higher at 12.9%. This means we can easily pay the interest on the debt. When calculating ROC, we assume it is taken from EBIT. So, EBIT is 12.9% and we take 6% interest on the debt. There will be tax savings on that too. The cost of interest will reduce further and we can service it comfortably. So, it seems we can expand That's what it looks like so far. Now, there could be other ways to reason this out as well. I am sharing my version with you. Now, if you have to answer whether there will be further growth in the future or not, we will answer that by referring to the return on capital employed. Only the return on capital employed, others are earning 11, and even after a decline, we are earning 12.9. So, we are earning better than the industry. So, there is a chance for growth, and this time we have also taken on debt. The advantage of trading an equity is that we are expanding with less equity. The return on equity will be higher, which means there is also a chance for growth. For equity shareholders, returns will increase, we will earn more than others, and since we have taken debt, we will see an even greater effect. So, when you are writing the answer, ideally the answer should be according to the debt and also according to the ROC. So, the rest of the details that have been given, what is their use? Actually, they are of no use in the answer, but since they are provided, we will write a little bit about each of them in the answer. So, how to present this, we will also show you along with it. First, have you understood the data, right? So, have you understood the data? Just write it once as a rough working note in your notebook. Once that's done, copy it neatly into your notebook. Alright, now we will write the entire thing, making sure to include both the main content and its interpretation in detail. Let's begin with the first part, which is called Evaluation for Expansion. Evaluation for expansion means analyzing whether the company should grow its business further. In this case, since the company is earning a higher return on capital employed or ROCE compared to the industry average, it indicates that the company is performing better than its competitors. Because of this strong performance, it is logical and beneficial for the company to consider expanding its business operations. The company must look for opportunities to grow and increase its market presence, as its higher ROCE suggests it can use its resources efficiently. Therefore, expansion is not just an option, but a strategic necessity for the company at this stage. Please continue writing along with me as we elaborate on these points. The main reason for considering expansion is the company's superior financial performance, which provides a solid foundation for future growth and success. The company has debt with an interest rate of 6% per year. However, because the company is in the highest tax bracket, the real cost of this debt is lower than the stated rate. This is due to the tax shield, which allows the company to deduct interest payments from its taxable income. As a result, the company pays less in taxes, reducing the effective cost of borrowing. For example, if the tax rate is 40%, the after-tax cost of debt would be 6% times 1 minus the tax rate, or 3.6%. This tax benefit is especially valuable for companies in high tax brackets, as it significantly lowers the overall cost of debt. Then write in the next paragraph, the current return on capital employed, or ROCE, is 12.9%. ROCE is a financial measure that shows how efficiently a company is using its capital to generate profits. A ROCE of 12.9% means the company is earning a good return on the money invested in its business. Because this rate is higher than the interest the company needs to pay on its debts, it will be easy for the company to cover its interest costs from its profits. This is important for both the company and its investors, as it shows the business is in a strong financial position and can meet its debt obligations without difficulty. Furthermore, having debt in the company's capital structure affects the returns for equity shareholders. When a company uses borrowed money, it pays a fixed interest to lenders and the remaining profits go to the shareholders. Since the number of shareholders does not increase with more debt, each shareholder receives a larger share of the profits. This means the return for equity shareholders is higher than it would be if the company had no debt. This effect is called trading on equity. Trading on equity refers to the practice of using debt to increase the returns to shareholders as long as the company's earnings are greater than the cost of debt. In summary, a high ROAS not only makes it easier for the company to pay interest on its debts, but also increases the returns for equity shareholders through trading on equity. So, how did we write that the company should expand? No, the ROC here is higher compared to the industry. On top of that, you have taken debt at 6%, on which you will also get the benefit of interest. The ROC is 12.9%, so you will easily be able to pay the interest, and by taking debt, your equity shareholders will also get higher returns due to the concept of trading on equity. So this covers the first and second parts. The question also asks you to mention the chances of further growth of the firm. So, the chances of further growth can be discussed based on the industry average itself. Compared to our 11, the chances of further growth are there if we look at the industry average, so you can mention that as well. To support this, you can also talk about the RC. You can also mention from the trading and QT perspective that since we have taken loans, the equity holders will get higher returns. This can also be said. You can also say that we are experienced players doing business for the past 7 years. There are many ways to present the scope. We don't really know what the institute wants to hear, that's a different matter. But we can present this answer in different ways. Now, if all these ratios are given, then we should write something about them as well. That's why, right here, we write what we understand from the present ratios that have been given. The present operational situations can be analyzed as follows. Look along with me now, for example, what all ratios are given. The GP ratio is saying it has decreased. If the GP has decreased, then that's not a good thing. What could be the reason for this? If you thought about it at that level, what could be the reason? It's not written anywhere. But if we try to find a reason, it could be that the sale price has decreased or sales have gone down. Costs might have increased. That's what common sense says. If the gross profit has decreased, it could be because of this that your operating profit has also gone down a bit. It has affected the ROC. It must have. Earlier, the ROC was coming to 15. Now it's coming to 12.9. So why is that? It's because of the gross profit. There must be a reason for that. Secondly, what we can see is that the operating ratio, meaning the operating expenses, have decreased very slightly, but operating expenses have slightly decreased. It must have affected the ROC positively. It has affected the ROC positively. If operating expenses have gone down, that's a positive thing, isn't it? Since operating expenses have decreased, even if slightly, it must have affected the ROC positively. Then, what else is there? Then, looking at the current ratio and quick ratio, the stock turnover and debtor turnover have decreased. So first, let's talk about stock turnover and debtor turnover. If stock turnover has decreased, what does that mean? The company is currently holding a larger amount of stock than usual, which can be considered a risky move. This is because having more inventory on hand increases the potential for losses if the market changes or if the products do not sell as expected, leading to possible financial challenges. The company is currently holding more stock than before, which can be considered somewhat risky for its operations. Debtor turnover has gone down. Please write down what that means for the company. Is giving more credit, which is generally considered risky. The company is, in fact, giving more credit, which is indeed risky. But then it is said that the current ratio and the quick ratio are exactly the same. What does that actually mean? I haven't written the full sentence. You have to write the full thing, or are you writing like me? In the exam, be sure to write a proper sentence. What does it mean if the current ratio and quick ratio are the same? Short-term solvency is better. There is no issue in short-term solvency. Short-term solvency is better for them. It means there is no issue here. Now, if this is decreasing and the quick ratio is less than the current ratio, then definitely some money is blocked in working capital. It must have resulted in the blocking of working capital. Sir, how did you come to know this? This is like a third eye. That's it. You get to know all this as you keep practicing. It depends on how well you studied in your intermediate. Now, there's no need to go back and revise anything from intermediate. Whatever I am explaining here right now, you just have to follow that much and learn from it. If you didn't know before, or had no idea, or didn't study much in intermediate and just passed, then learn from what is explained now. If needed later, we'll look at it in detail. This is not a repetition of all those things. So, there's no need to get too worried about it. If the current ratio and quick ratio are the same, then short-term solvency remains the same. But how do we know that working capital has been blocked? Because your turnover stock card, debtors are decreasing. So, even if stock and debtors decrease, if working capital is not blocked, that is, if you don't keep extra money in working capital, then the current ratio and quick ratio will get distorted. Alright, now how does this blocking happen? Blocking does happen. Because a stock turnover is decreasing, meaning the stock is getting accumulated, debtor turnover is decreasing, meaning debtors are also increasing, money is getting stuck, hence the working capital is getting blocked. It means some money is getting stuck. Apart from that, what else are we getting? Yes, but what information are we getting? We talked about all these ratios, so we have written their interpretation here, and this is the current scenario that we are seeing. Alright, people are able to see the current scenario. When many companies start growing, their hunger for growth increases even more, so to achieve that growth, they often take wrong decisions like keeping excess stock or giving more credit to debtors just to show that sales are increasing. Somewhere down the line, these companies end up facing financial losses in the future. So, because of this, we can see the risk here, but at the same time, we can also see that returns are coming in. But somewhere, due to the working capital getting blocked, we can see the risk increasing a bit. So, the question was asked about what are the chances of further growth. So, the chances of further growth seem to carry a bit more risk due to operational issues. But if you think from the ROC point of view and the cost of debt point of view, the current outlook on the situation appears to be favorable. Now, I would like each of you to further develop this point in your writing. Consider that the company has been operating in its field for a total of 7 years. In the context of business, this is a considerable period, as it suggests that the company has not only survived but has also adapted to the various challenges and changes that can arise in the industry. Over these years, the company would have gained valuable experience, learning how to navigate the complexities of its market and improve its operations. This accumulated experience is important because it often leads to the development of expertise, allowing the company to handle its business more effectively. In your writing, you should elaborate on how this length of time in business contributes to the company's ability to manage its operations, respond to challenges, and maintain a stable position in the market. By focusing on the significance of experience and expertise, you can strengthen your argument about the company's capability to continue succeeding in the future. You might be under the impression that the people running this company have truly become experts in handling these kinds of business matters, given their consistent performance and the way they manage their operations. Furthermore, when we look at the numbers, we can see that their return on capital, or ROC, is not just good, but actually higher than what we observe in other similar companies operating in the same industry. This higher ROC is a strong indicator that the company is successfully capturing a larger share of the market, likely as a result of the strategies they have been implementing over the years. Now, while we do not have access to the specific details of the strategies they have chosen to employ, and we cannot say with certainty exactly what steps they have taken to achieve these results, the evidence suggests that their approach is working very well. The fact that they are achieving a higher ROC than their competitors, and that they have managed to remain in business and continue growing for a period of 7 years, further supports the idea that their management team is making effective decisions. In summary, although the precise methods they use remain unknown to us, the combination of their impressive ROC and their sustained presence in the market for such a significant amount of time clearly demonstrates their expertise and the effectiveness of their business strategies. Currently, it seems to me that they are putting in more working capital. So, it could be their strategy that by investing a bit more working capital, they can generate more business. So, that's one way of thinking about it. So, as it is, receivables are also higher than similar firms, which indicates the company is gaining more market with such strategies. So that's why we can conclude, therefore, what was the question here? Chances of further growth. It seems that there are high chances of further growth for this company. In fact, when we look at the data and the trends, it becomes even more apparent that the potential for this company to continue growing in the future is quite significant. There are high chances of further growth for this company, as we have discussed. Okay, did you understand how to write it? So, you got a slightly different level of understanding that calculation is not interpretation. Remember, calculation simply gives us the numbers, but interpretation is about understanding what those numbers actually mean in the context of the company's future prospects. So we did not talk about ratio calculation, that we are thinking what is ratio, learn it like children and leave it, talk about it further, so all the ratios are given and what you have to do now is to extract interpretation from that ratio, tell whether it will expand or not. So when you are looking at the Answer Institute, it has neither given one and two by combining it. So how is it given? It says that we are looking at expansion and further by combining both. It has spoken about return, capital employed, it has spoken about gross margin, it has spoken about operating ratio, and it is speaking about the impact of operating ratio. How 0.1% came? We do not know how this impact came. It is not known from the Answer Institute. It has spoken about short-term solvency. Long-term solvency means that the company has not taken debt till date, so there is no money problem in its debt. It will be able to pay the debt comfortably. So I cannot write this point and the tax. From 6% debt there will be savings, its cost will be reduced. Tax rate has been assumed to be 30%, so by reducing tax, the interest rate has been reduced to 4.2 and that without VAT by payment from 12.9%, and then the industry average is also 11 here and we are getting more. So that's why he is saying that we have to expand and there will be growth too. So I have improvised it a little. What did I say? For expansion, higher ROC comes from our industry and we have also arranged capital for it, and that capital has been received from the market at 6%. There will also be tax saving on it. A ROC of 12.9% is so much that we can easily make its payment, so I think that expansion should be done. Its cutoff will also be given to the shareholder, so I have justified it to you in this way, and in my view it is right. That's why I have told you that you will not go to the exam by memorizing the answer of the institute. So the method that you understand yourself, I will come and see how the person doing the check will check it. If you assume what all these points are, then look together and see if it is written about it somewhere. Return capital leverage is written. He will give the number. He will run it like this. If it is written about debt at 6%, then he will write about debt at the rate of 6%. Then he will say yes, it is okay. He does not even read that much. It is a simple thing, but you have to learn. It is not that he does not read. So you also write anything and come, then whether there will be further growth or not. For that I analyze the current situation. If GP has decreased, then it is good. If you are writing about GP, then underline it. If operating expense has decreased, then also it is good. It is positive. Okay. If GP has decreased, then it is not good. Sorry. If you write ROC negatively affected or write it negatively, then it will be understood better. So if this GP decreases, then ROC has been negatively affected. Operating expense has become positive. Turnover has decreased, then the risk increases went. Here, since turnover has decreased, risk has increased. But this ratio is the same. Short-term solvency is there. There is a block in opinion. It seems there is an issue with working capital. The company has been in business for 7 years. So, this is positive. They must have gained expertise. Then, the ROC is higher as well, in a similar manner. So, this is also positive. And that's why I feel that there should be further growth. So, you have given your justification. All right. So, this is how the answer should be. In the exam, you have to write exactly what I am teaching you. That goes without saying. If I have taught you something, you have to do it my way, not go and do something else. You have to do exactly what I have taught. Because I am teaching you things in a natural way, not just making you memorize them. So, we have to write only the natural answer. And we try that our answer does not deviate too much. We should not digress from here. All our points are covered, but you can add one more point if you want. Regarding long-term solvency, all right. If you are able to add, then please do add. Consider writing one more line somewhere in your work, such as, for example, and there is no issue of long-term solvency, and there is absolutely no risk of long-term solvency, and there is no risk whatsoever of long-term solvency. By including this, you further emphasize the absence of any concerns regarding long-term solvency. Alright, so you can write about this as well. That's all. Nothing else will be a perfect match. In the comments, you have to find the nearest match. Match the one in the comments to the nearest one and set a logic for it in your mind. So if you get such a situation in the future, you'll be able to handle it, right? First, you have to plot the data. Then what do you have to do? After that, I have to go back to the question, read what is asked in the required section, and answer each part one by one. This is always the system. So, is it justified for the directors to go for expansion or not? Now, to justify it, I found this reasoning. Our ROC is good, we are earning more, we have got the required capital, the interest on capital is also low, and the returns are enough that we can easily pay the interest. So, we should go for expansion. Then he is asking about the chances and further anger or not. So, we have analyzed all the ratios, and whatever information is given should be touched upon somewhere in the answer. we have a protocol for exams. So, we analyzed the situation and wrote comments for everything. And then, whether there will be growth or not, we concluded it positively. How to make that conclusion positive? How did we find this out? It's just by understanding and applying logic that yes, growth should happen. Alright. So normally, a company does not stop because of such minor situations. For growth, no matter what the work is, you have to keep moving forward, and we always tell everyone to move ahead. It's not a big deal if your stock is decreasing, so don't stop growing because of that. It's also not a big deal if the debtor doesn't pay on time, so don't stop growing for that reason either. These strategies cannot stop growth. That's why, when these people look at the business and do it, we get to know everything. We have studied many other case studies, so it's new for you. If you didn't click, it became a learning for you. For all this, just hold on. No one would just stop growing the business, right? Slowly, don't grow, no, that's not it. There are some great issues for which we should stop the growth. When should growth actually stop? When there is going to be full competition in the market, when regulations are about to change, or suppose we are facing financial distress, like our capital is not enough to repay loans, or old repayments are still pending. Then we will think that, yes, there are a lot of issues with growth. But here, it has just slowed down or decreased, it hasn't become bad. Why wouldn't you grow? Of course, you will grow. So, you have understood this essence while solving the questions. Alright, I hope you enjoyed coming here. Our unit on financial performance analysis has now been completed. So, what all questions did I make you solve in this unit? Just take a look once again. I gave you a question on cash flow, which was an easy question, but still, when you attempted it, you might have made some mistakes. So, you got that. Alright, in Explain the Changes in Cash, I had told you to write it on your own, so what changes in cash you had to write, I had explained that to you as well. Let me say it once again, our cash became 80-60, it decreased by 20. This first line explains the reason for that decrease. We generated 210 from operating activities but consumed 70 by purchasing fixed assets and 160 got consumed in financing activities. Overall, there was a deduction of 20, that's why the decrease happened. You just have to write this explanation. Then we did question 3. In question 3, it was not mentioned to do comparative statement analysis, but the question asked what kinds of analysis can be done. So I said, it can be comparative as well as common size analysis. So here, for reference, I mention both common size and comparative statement analysis. So I showed you both by doing them. And I explained how to write the answer. First, you have to write where you think the analysis should be made by you regarding the numbers. So what will you do? You can prepare a comparative statement, a common size statement, or you can do trend analysis. But trend analysis is not possible here because there are only 2 years. Even if you don't write about trend analysis, it's fine. So what should you write in this part? Mr. Y can do common size and comparative statement analysis. Then what should you write in part B, the calculation part? In the calculation, as we told you, you should show the working for the common size statement and the comparative statement and write your comments by elaborating on your own. Then in the third part, what is said? Is Mr. X's view correct? Yes, it is, because it is based on the common size. And what should you write in the comments? I said, if you don't understand much of the link, then just write about the increase or decrease. Then I explained to you the next level of commenting. What is the next level? That you link the upper item to the lower one, and there is another next level where you bring in something from outside and link it. Why this might have decreased or increased, we have learned that later on, but it is not necessary to write that every time. Even if you just write the basic increase or decrease, that is also fine. Then we did the for number 1. In this, what you have to do is just make the total of the balance sheet as 100% and then calculate the percentage of everything accordingly. And the comment is to write the increase or decrease in the percent of each item. I had explained this to you by reading it out and had also said here that you have to compare each item, but you don't have to explain why it increased or decreased, just mention that much. And similarly, when question number 5 came, what do you have to do in that as well? You have to make a common size statement and give the interpretation. So, we just have to make the common size statement in this. So it was simple, it's straightforward, and for the interpretation, I have taken it to the next level. I taught you that if our COGS is decreasing here, then its impact is that GP is increasing. This much we can understand. And at the next level, I explained that the reason could be that input cost has reduced or efficiency has increased. So, if you can write this, it's good. Even if it's not given in the answer to this sum, you can still write it with a blue pen and take it to the exam, alright? Similarly, if operating expenses are increasing, you can mention why operating expenses are increasing. You can write those points here as well, which we had read in the answer, maybe increased supervision, alright? There could be many other reasons too, but such an example is created that maybe it happened because of this. These are assumptions. Now whether they are right or wrong, I don't know. But there is a risk that if you write something else, some other reason which is actually hidden here, then your marks could be cut down to 0. To avoid this risk, it's better that you write the blue one in the exam. It's very good to know all this, but in the exam it's safe to write the blue one. After this was question 7, where you had to decide whether to go for expansion or not, and if there is a chance for growth. There was a ratio given. So, by interpreting the ratio, we understood the situation that expansion should be done and there is also a chance for growth. I gained a bit of confidence, and when I did some of it on my own, that also boosted my confidence. So, just do as I tell you. You also need to remove this judgmental mindset. I keep telling you again and again that what students do is, they keep judging themselves. No, I won't be able to do it. Sir is teaching, but I won't be able to do it. You will be able to do it very easily, and you will definitely score more than 70 marks. This is my guarantee. But you will have to follow me and work hard along with me. Now you might say, we are about to appear for the exam. I hardly have any time left. How will we work so hard? We were just thinking that you would make us do everything. So that's a wrong expectation. The exam is yours. The degree is yours. Am I going to appear for the exam for you? No, right? So you should come yourself. How will you know this? When you do it yourself, till now, there hasn't been any sum where I have left it completely for you to do on your own. I have explained everything, told you to pause and do it yourself. Then the answer is also printed here. I have read it out to you, and for some, I have even written it down. Alright, so gradually you will also become skilled with my technique, and slowly you will keep gaining confidence as well. Okay, you will enjoy it more and more as you keep moving forward slowly, so just stay with it. Isn't it? Thank you so much.